Ever wondered why Bitcoin's value seems to skyrocket every 4 years? Has the term Bitcoin halving caught your attention? Welcome to a journey into the heart of Bitcoin's 4-year cycle, a phenomenon that has stirred up the cryptocurrency world time and time again. This cycle is intrinsically linked to an event known as Bitcoin halving. But what is Bitcoin halving, you ask? Well, it's an event where the reward for mining new blocks is halved, meaning that miners receive 50% fewer Bitcoins for verifying transactions. Bitcoin halvings are scheduled to occur once every 210,000 blocks, roughly every 4 years, until the maximum supply of 21 million Bitcoins has been generated by the network. This halving process is significant because it controls the supply of new Bitcoins. By slowing the rate at which new currency is introduced, Bitcoin halving acts as a form of inflation control. This is a key difference between Bitcoin and traditional fiat currencies, which can have their supply increased or decreased by central banks to manage economic stability. The 4-year cycle of Bitcoin isn't just a number, it's a catalyst for the growth of this digital currency. Each halving event has historically led to a significant increase in Bitcoin's value. This is largely because the halving reduces the number of new Bitcoins generated, which lowers the available supply and can lead to increased demand. The Bitcoin halving in 2020 led to a record-breaking bull run, with Bitcoin's value reaching new heights. As we approach the next halving in 2024, investors and crypto enthusiasts around the globe are keeping a keen eye on the market. But it's not just about the price. The halving event also impacts miners who rely on block rewards for their income and can influence the overall security and stability of the Bitcoin network. Intrigued? Well, there's a lot to unfold about this intriguing event, so stay with us as we dive deeper into the world of Bitcoin halving. The year 2009 marked the birth of Bitcoin, the world's first cryptocurrency. But did you know about the first Bitcoin halving event that occurred in 2012? When Bitcoin was first introduced by the mysterious Satoshi Nakamoto in 2009, it was a novel concept. A decentralized digital currency that relied on cryptography for security, with no central bank or government in control. The initial block reward was set at 50 Bitcoins, meaning that every 10 minutes, 50 new Bitcoins were created and awarded to those who were contributing their computing power to maintain the network, a process known as mining. But here's where it gets interesting. Satoshi Nakamoto designed Bitcoin with a built-in economic policy. Every 4 years, or approximately every 210,000 blocks, the block reward would be cut in half. This event, known as halving, is a deflationary measure that aims to preserve the value of Bitcoin by controlling its supply. Fast forward to 2012, the world witnessed the first Bitcoin halving event. The reward for mining a block of Bitcoin was reduced from 50 to 25 Bitcoins. So what happened next? Did the world of Bitcoin come crashing down? Quite the contrary. The first halving event triggered a surge in Bitcoin's price. It rose from around $12 before the halving to over $100 within the following months. The reason? Well, it's simple economics. When the supply of something decreases while demand remains the same or increases, the price tends to go up. And that's exactly what happened with Bitcoin. With fewer new Bitcoins being created and the demand for this revolutionary digital currency growing, the price naturally increased. This price surge attracted more miners, more investors, and more attention to Bitcoin, making it a hot topic in the world of finance and technology. The first Bitcoin halving set the stage for a new era in the cryptocurrency market, making Bitcoin a hot topic among investors. The halving events of 2016 and 2020 were significant milestones in Bitcoin's journey. But what happened to Bitcoin's price during these events? Let's delve into these intriguing chapters of Bitcoin's history. The year 2016 marked Bitcoin's second halving event. A month prior to the halving, Bitcoin was trading at around $450. Post-halving, the price didn't immediately skyrocket. Instead, it hovered around the $600 mark for the rest of the year. However, by the end of 2017, Bitcoin had reached a then all-time high of nearly $20,000. This represented a staggering increase of over 4,000% from the pre-halving price. Fast forward to 2020, and we find ourselves in the midst of Bitcoin's third halving. In the months leading up to the event, Bitcoin was trading at approximately $8,500. Much like in 2016, the price didn't shoot up immediately after the halving. It remained relatively steady around the $9,000 mark for a few months. But then, in a turn of events that took the world by storm, Bitcoin embarked on a monumental bull run, eventually hitting an all-time high of nearly $65,000 in April 2021. These two halving events demonstrate a pattern. In both instances, the price didn't explode immediately after the halving, but within a year or two, the price experienced a significant surge. This suggests that the impact of halving on Bitcoin's price isn't immediate, but rather builds over time. It's also crucial to note that these halvings coincided with an increase in mainstream interest and adoption of Bitcoin, further fueling the price growth. So, while the halving reduces the rate at which new Bitcoins enter circulation, it also seems to create a sense of scarcity among investors, which in turn drives up the price. These halving events have proven to be catalysts for Bitcoin's price surge, making them pivotal moments in the crypto calendar. The question now is, what can we expect from the upcoming 2024 halving? But that's a topic for the next scene. Stay tuned. As we approach the next Bitcoin halving in 2024, investors are on the edge of their seats. But what can we expect from this upcoming event? Well, if history is any indication, we can look forward to some interesting market activity. The previous halvings have each had a significant impact on Bitcoin's price, typically resulting in a substantial increase. This is primarily due to the reduced supply of new Bitcoins entering the market, which can create a sense of scarcity and thus drive up demand. Now, let's delve into some predictions for 2024. Many experts anticipate a surge in Bitcoin's price following the halving, similar to what we've seen in the past. Some even go as far as to suggest that we could see Bitcoin reach unprecedented heights. This optimism stems from the belief that as the supply of Bitcoin decreases, the demand will continue to rise, pushing the price upward. However, it's essential to remember that the cryptocurrency market is influenced by a myriad of factors, and the halving is just one of them. Global economic conditions, regulatory changes, technological advancements, and shifts in investor sentiment can all play a role in shaping the market outcome. Moreover, as Bitcoin continues to mature and gain mainstream acceptance, its price may become less susceptible to dramatic swings. This could mean that while the halving is likely to have an impact, it may not result in the same explosive growth we've seen in previous cycles. But what does this mean for the overall crypto market? Well, given that Bitcoin is the pioneering cryptocurrency and often sets the tone for the rest of the market, we can expect other cryptocurrencies to react in tandem with Bitcoin. If Bitcoin's price increases, it's likely that we'll see a ripple effect across the crypto landscape, with other digital currencies also experiencing growth. While the future is unpredictable, the past halving events suggest a promising outlook for Bitcoin post-2024. Remember, investing in cryptocurrencies is not without risk, and it's crucial to do your own research and consider your financial goals before making any investment decisions. Understanding Bitcoin halving is crucial for every crypto investor. But what are the key takeaways from this phenomenon? Let's distill the salient points we've discussed into a digestible summary. Firstly, Bitcoin halving is a pre-programmed event that occurs approximately every 4 years. It's a deflationary mechanism that cuts the rewards miners receive for verifying transactions and adding new blocks to the blockchain in half. This process effectively lowers the rate at which new Bitcoins are introduced into circulation. Historically, halving events have proven to be significant market catalysts. They've been followed by substantial bull runs, with Bitcoin's value reaching new all-time highs. This trend was evident following the first halving in 2012, the second in 2016, and the third in 2020. Now, let's talk about the potential implications for investors. Bitcoin halving affects supply and demand dynamics. As the rate of new Bitcoins entering the market decreases, if demand remains steady or increases, we could see a resultant rise in Bitcoin's price. However, it's important to note that while history often rhymes, it doesn't always repeat itself. Market dynamics are influenced by a multitude of factors, and Bitcoin halving is just one piece of the puzzle. Investors should also consider the role of miner behavior. As mining rewards decrease, miners with higher operational costs may be forced to sell their Bitcoin to stay afloat, potentially creating short-term selling pressure. However, the reduced supply of new Bitcoins could counterbalance this effect in the long run. Lastly, Bitcoin halving events have historically heightened public interest and media coverage around Bitcoin, potentially attracting new investors and adding fuel to the post-halving bull runs. As we await the 2024 Bitcoin halving, it's clear that this event is more than just a technicality. It's a pivotal moment that could redefine the crypto market landscape. Please remember to like this video and subscribe to this channel. Happy investing.